Welcome, class. And it's another segment of Phil, the Mortgage Professor, brought to you by Mortgage Alliance. Mortgages are marvelous. Well, thank you, Tyler. You've seen a couple of my segments that tell you all about mortgages and how they relate to beer. Well, Tyler said, Phil, can you do a trilogy? I just absolutely hate mortgage math, and I like the way you talk. So give me another story about how beer and mortgages are so similar. Well, excuse me. Oh, sorry. Legal said, reminder, Phil, disclaimer. Okay, so here's what the disclaimer is. Folks, we're going to be talking about beer, and we're also going to be talking about rye today. Now, here's the disclaimer. You have to be of legal age to participate in mortgages and in beer. So if you're underage, unless you're dealing in a family trust, and we'll get to that yet, don't listen to this. Shut me down. Go away. We're going to be talking about mortgages, we're going to be talking about beer, and we're also going to be talking about rye today. Now, no actual beer will be used during this segment, nor will there be any rye used in this segment. So for those of you with a philosophical, a religious, or a health prohibition from any alcoholic drinks, get over it, because I won't be using any real beer, no real rye. So, Tyler, you wanted a beer segment, and how can this be an analogy towards mortgages? Well, there is still a program within Canadian mortgages where, although you have to have 5% down payment, in other words, the maximum mortgage you can get is 95%, there is still a program out there that with the proper credit credentials, you can actually get a 95% mortgage, the beer, and the 5% could come to you by way of a program commonly referred to as cashback or free down. Now, what that means is that without your money into the mortgage, you're actually getting all of your 95% and your 5% from the lender. So in other words, it's very much like a Boilermaker. So what happens is you got your beer, and then you've got some rye. And the object of the game is, of course, that you want to get housed or soused faster. In other words, if you haven't been able to save up your down payment, but you want your house, the banks can provide that, provided you've got the income and you've got the good credit report that says, yes, we can let you have your beer and the down payment. Now, just like when you have a beer and you throw in some rye, the Boilermaker, what happens is that you've increased your alcohol content. What does that mean? Well, these free down programs and cashback programs are based on that you are going to take in more alcohol faster. What does that mean? That means that you're going to pay more interest than if you would have had your 5% down. They're going to give you something called posted rates, which can be over 1% higher than if you just negotiated because you already assembled your 5% down. So that means that you can get housed or soused faster. But just as you can get housed or soused faster, it also means that there could be a reckoning, a hangover of humongous proportions. And what do I mean by that? Well, you just have a beer, you have to absorb the alcohol, and you may get away over time without any hangover. But if you pour back a beer and you pour back that rye, what happens? Alcohol content into your bloodstream faster. If you don't wait it out, you're going to have that pounding headache. And what is a pounding headache when it comes to these cashbacks and other programs? What it means is that if you drink or sell your house too fast, you'll not only be, in the meantime, paying a higher mortgage interest rate, but you'll have the double effect of having to pay back, if not all, at least a portion of the additional alcohol, that rye, that cash back that you got. So higher interest rates, bigger penalties for waking up and wanting to get out of the bar sooner. So class, that's the moral of the story. We got beer, we got rye. You can get housed faster, but you get soused faster. And the headache you can have waking up too soon, moving out of the house, selling the house, can hurt. Keep that in mind.